Welcome back. Forum Daily's weekly market update with Catherine Murray is up. Catherine is the host of The Buck Stops Here, and she joins us now. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing North American equity markets move higher today following a big jump in U.S. equities yesterday, and also the TSX moving and closing higher on Wednesday. The big news in the markets this week, of course, has been what we've heard from the BOC, and in fact, centers around central bankers around the world. The BOC did raise rates by 75 basis points yesterday, lifting the benchmark rate to 3.25%. And also reiterated that rates will need to rise further. The statement did lean hawkish, and importantly, the statement played down the peak inflation narrative. And therefore, the BOC will be unlikely to pause in their rate rise hikes. Recall the market had been moving higher, the equity markets had been moving higher on the back of the view that the BOC, as well as the US Federal Reserve, will talk about peak inflation. In other words, that inflation will be in the past, and therefore they don't have to be as aggressive in the rate hike cycle. That has not been the case. That is not what we're hearing from the BOC. It's not what we're hearing from the US Federal Reserve at Jackson Hole, let alone in an interview this week with Fed Chair Jerome Powell. In other words, they seem very much intent on raising rates further. The big question, of course, is what does that mean for the Canadian economy as well as the US economy? And the concern there, of course, is will they cause a recession by hiking too aggressively? Interestingly, though, we did see the markets react calmly to the news yesterday from the BOC and also, of course, today. So maybe investors believe that central banks, in fact, have it wrong and will pause in their rate hikes. That's the takeaway. Other takeaways, though, as it relates to the BOC rate rise, there's concern that aggressive rate hikes will plunge the economy into a recession. That's from the Toronto Star. And also that Canadians will really have payment shock as interest rates rise. Again, according to the Toronto Star, some views and reports there. Importantly and interestingly, and this always gives you a bit of a gauge in terms of the outlook for the Canadian economy, the Canadian dollar did not rise by very much following the aggressive rate hike. Remember, money flows to where it gets paid the most. So you would think that people would be buying the Canadian dollar because we are raising our rates. They're going to get paid more. You'll get paid more in your bank account. That was not the case. You have to ask why. Why is that not the case? Likely because of the lack of friendliness towards our oil and energy industry. If we were able to capitalize on that, you would see a commodity currency like the Canadian dollar moving higher. Now, of course, to be fair, we do have the US dollar showing some significant strength against the Canadian dollar as well as the euro. That's really been of note to many investors as well, just that strength of the US dollar and the pressure that that can put on other economies around the world. Importantly as well, when we take a look at the price of oil, it is up by about 1.7% today, following a 5.7% decline yesterday. The reason for the decline, of course, is concerns surrounding global demand destruction stemming from China, where lockdowns do continue. They've been extended. And also, of course, the energy crisis in Europe is stoking a global growth scare. So global demand destruction very much weighing on the price of WTI. Now, having said that, there is and has been no structural supply change. Of course, it would take years for that to happen. So that should act as a bit of a support for the price of WTI. Also, to add to support for WTI or the price of oil, tighter supply coming from OPEC Plus, and also Europe's coming ban on Russian oil imports. So certainly a lot at play as it relates to the price of WTI, but again, importantly, no change in that supply structure. The only aspect really weighing on oil to the downside is concerns surrounding global growth. In terms of market action today, a bit of a risk-on day in those U.S. markets. You're seeing banks, biotech, restaurants, cruise lines, rails, as well as industrial metals all moving higher. So that's a bit of a positive, a risk-on day. And in Canada, you're also seeing the markets move a little bit higher, but somewhat quiet from a headline perspective. We'll probably take that. What to watch for tomorrow? We've got Canadian jobs. The consensus is looking for a 15,000 job gain in August. That follows a surprise 31,000 loss of jobs in July. But I just pointed that RBC and CIBC are a little bit more moderate, looking for a 5,000 job gain. So we'll see what that comes out to tomorrow. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. For more on the markets and the world of finance, be sure to tune in to Catherine Murray on the Buck Stops Here.